start the fun, yo, make we have a good time now. St. Mary's potato chips, yeah. Got the snacks up me right when the crew roll out. Find your flavor, yeah. St. Mary's potato chips for ya. Warm up the vibe. St. Mary's potato chips with sea salt, yeah. Find your flavor now, me feel the sound. One for me, one for you, one for friends, and we outside, and this are the snack where we prefer. JP St. Mary's potato chips. St. Mary's potato chips for ya, or with sea salt. Find your flavor.
Kingston Wharves Limited. Professionalism, efficiency, and innovation. Delivering world-class service for over 70 years. Located at the center of maritime trade routes, Kingston Wharves provides strategic access to a global service network on an exceptional scale. Serving as the regional transshipment hub for Hogue Autoliners and providing services for leading car and truck carriers such as Ucor, K-Line, NYK, Mitsui, OSK, and Glovis. Our decades of experience in port operations and logistics relay services has made Kingston Wharves world-class Ro-Ro solutions second to none. With increased on-dock storage capacity, more efficient operations, and secure parking facilities, currently some 3,000 motor units can be stored in our strategically located 12-acre car park. Our team of highly skilled professionals are prepared and waiting for your vessels to call. As soon as the vessels are berthed, motor units are reconciled with cargo manifest documents, while lashers, technicians, drivers, and coordinators work together to safely deliver the vehicle 500 meters away from vessel operations. We possess essential resources for handling all types of motor vehicles, from passenger vehicles to construction and other commercial machinery. Kingston Wharves has offered continual improvements in the safety and reliability of our services, in step with market globalization standards. We continue to expand along the value chain to offering a complete range of value-added services, including minor assembly and accessory fittings, long-stay maintenance, stockyard management, and the supply of spare parts and associated inventory. But Caribbean's leading multi-purpose terminal is the best choice for managing your motor vehicle needs. We have opened the doors of opportunity to connect you with the Caribbean, Latin America, and the world. The premier multi-purpose, multi-user terminal in the Caribbean. Let us be your auto logistics partner. Kingston Wharves Limited. Professionalism, efficiency, and innovation.
Given the right opportunity, everyone has a chance to be great. It's not just the quantity of the food we produce, but the quality. It's not just the land or the planting of the seed, but the pride and joy of the nation we feed. Jamaica land we love is the value and standard to which we hold true.
We are JP St. Mary's, and we are fresh from the farm to you.
Start the fun, yo, make we have a good time now. St. Mary's potato chips, yeah. Got the snacks up right when the crew roll out. Find your flavor, yeah. St. Mary's potato chips for ya. Warm up the vibe. St. Mary's potato chips with sea salt, yeah. Find your flavor now, me feel the sound. One for me, one for you, one for friends, and we outside, and this are the snack where we prefer. JP St. Mary's potato chips. St. Mary's potato chips for ya, or with sea salt. Find your flavor.
Kingston Wharves Limited. Professionalism, efficiency, and innovation. Delivering world-class service for over 70 years. Located at the center of maritime trade routes, Kingston Wharves provides strategic access to a global service network on an exceptional scale. Serving as the regional transshipment hub for Hogue Autoliners and providing services for leading car and truck carriers such as Ucor, K-Line, NYK, Mitsui, OSK, and Glovis. Our decades of experience in port operations and logistics relay services has made Kingston Wharves world-class ro-ro solutions second to none. With increased on-dock storage capacity, more efficient operations, and secure parking facilities, currently some 3,000 motor units can be stored in our strategically located 12-acre car park. Our team of highly skilled professionals are prepared and waiting for your vessels to call. As soon as the vessels are berthed, motor units are reconciled with cargo manifest documents, while lashers, technicians, drivers, and coordinators work together to safely deliver the vehicles to the parking facilities under 500 meters away from vessel operations. We possess essential resources for handling all types of motor vehicles, from passenger vehicles to construction and other commercial machinery. Kingston Wharves has offered continual improvements in the safety and reliability of our services in step with market globalization standards. We continue to expand along the value chain to offering a complete range of value-added services, including minor assembly and accessory fittings, long-stay maintenance, stockyard management, and the supply of spare parts and associated inventory. But Caribbean's leading multipurpose terminal is the best choice for managing your motor vehicle needs. We have opened the doors of opportunity to connect you with the Caribbean, Latin America, and the world. the premier multi-purpose, multi-user terminal in the Caribbean. Let us be your auto logistics partner. Kingston Wharves Limited. Professionalism, efficiency, and innovation.
We believe that given the right opportunity, everyone has a chance to be great. It's not just the quantity of the food we produce, but the quality. It's not just the land, joy of the nation we feed. Jamaica land we love is the value and standard to which we hold true.
We are JP St. Mary's, and we are fresh from the farm to you.
Good morning, ladies and gentlemen. I am Charles Johnston, chairman of the company, and I will be the chairman of this meeting. On behalf of the board of directors, I'd like to welcome you to the 2021 annual general meeting of the shareholders of Jamaica Producers Group Limited. Shareholders, as we continue to carefully manage the health risks due to the COVID-19 pandemic and to conduct business in the best interest of our stakeholders, your company sought and was granted the permission of the Supreme Court of Jamaica to hold this 84th meeting of the company in a virtual format. The court's order and all other documents related to our court application have been posted on the company's website and on the website of the Jamaica Stock Exchange for your viewing. As has been communicated, all voting will take place by proxy, and we will continue to accept the submission of questions from our shareholders by email at headoffice@jpjamaica.com up to 10:30 this morning. With this in mind, I would like to thank our shareholders and friends who are watching this meeting via live stream, and the board of directors of JPG who are connected to this meeting via Zoom. At this time, I'd like to call the meeting to order. And I'd like to introduce our company secretary and group general counsel, Ms. Simone Pearson. And I ask that she confirm that the required quorum of 15 members present in person or by proxy has been met.
I confirm, Chairman.
I now call this meeting to order and invite Ms. Shanique Francis of JP Tropical Foods Limited to open in prayer.
Father, we thank you for this morning. We thank you that you're God and all by yourself, you're God. We thank you this morning for the 84th gathering for JP Group, mighty God. We thank you for your blessings and all that you have done for us. Father God, we pray this morning that your presence will ever be with this company, mighty God, that you grant this company wisdom, that you grant this company direction, mighty God, that you grant this company prosperity, mighty God. We pray for the leaders, that you will continue to uphold them in your righteous right. And mighty God, I pray that you perfect that which concerns this company in the name of Jesus, and do for us what we can't do for ourselves in Jesus' name. Amen.
Thank you, Ms. Francis. Ladies and gentlemen, the accounts and the reports of the directors and auditors have been circulated previously to all members. I would now like to introduce Mr. Nigel Chambers of KPMG, the company's auditors, and I ask him to read the auditor's report, which may be found on pages 48 to 54 of the annual report. Immediately following this, I will introduce the board and management team, and we will receive a report from your Chief Executive Officer. Mr. Chambers.
Thank you, Chair. And as the chairman has indicated, the report is on pages 48 to 54 of your annual report. There are two sections to the report. There's a report on the audit of the consolidated financial statements, and on page 52, a report on additional matters required by the Companies Act. And as required, I'll read the report starting on page 48. Starts with the opinion. we have audited the consolidated financial statements of Jamaica Producers Group Limited, the company, and its subsidiaries, collectively the group, set out on pages 55 to 110, which comprise the group balance sheet as at December 31, 2020, the group profit and loss account, statements of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising significant accounting policy and other explanatory information. In our opinion, the accompanying consolidated financial statements give a true and fair view of the financial position of the group as at December 31, 2020, and of its financial performance and its cash flows for the years then ended in accordance with International Financial Reporting Standards, or IFRS, and the Jamaican Companies Act. We conducted our audit in accordance with International Standards on Auditing, or ISOs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statements section of our report. We are independent of the company in accordance with the International Ethics Standards Board for Accountants, International Code of Ethics for Professional Accountants, including International Independent Standards, or the ISBA Code, and we have fulfilled our other ethical responsibilities in accordance with the ISBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters are those matters that in our professional judgment were of more significance in our audit of the consolidated financial statements of the current period. These matters were addressed in the context of our audit of the financial statements as a whole and in forming our opinion thereon, and we do not provide a separate opinion on these matters. There are three key audit matters, and I will go through them in turn. Two key audit matters. The first one is impairment of goodwill and intangible assets. The carrying value of the group's goodwill and intangible assets may not be recoverable due to changes in the business and economic environment in which specific subsidiaries operate. The factors create inherent uncertainty in forecasting and require significant judgment in estimating and discounting future cash flows that support the assessment of recoverability. There's more information in notes 3J and 13 of the financial statements. In addressing the matter, our audit procedures included testing the reasonableness of the group's forecast and discounted cash flow calculations, including using our valuation specialists to evaluate the assumptions and methodologies used by management, comparing the group's assumptions to externally derived data, as well as our own assessments of key inputs such as projected economic growth, competition, cost inflation, and discount rates, as well as performing sensitivity analysis on the assumptions, and lastly, assessing the adequacy of the group's disclosure about the assumptions and sensitivity of the impairment assessments to changes in key assumptions. Second key audit matter relates to valuation of employee benefits, asset, and obligation. A subsidiary operates a defined benefit retirement scheme and provides other unfunded retirement benefits. Significant estimates are made in valuing the group's employee benefit assets and obligations. The valuation of these benefits is considered to be a significant risk, as given the value of the assets and liabilities, small changes in the assumptions can have a material financial impact on the group. The key assumptions involved in calculating employee benefit asset and obligations are discount rates, inflation, future increases in salaries and pensions. Management appointed an external actuarial expert in measuring the employee benefit asset and obligations at the reporting date, and the use of significant assumptions increases the risk that management's estimate can be materially misstated. There's more information in notes 3Q and 17 of the financial statements. In performing our audit, we ensured that the following procedures were performed: evaluating the independence and objectivity of the appointed actuarial expert, determining that the actuarial valuation was performed in accordance with the requirements of IS 19, which deals with employee benefits, testing the employee data provided by management to the actuarial expert, assessing key assumptions used by the actuary, including inflation and discount rates, and comparing them to information from independent sources, confirming a selection of the plan assets with the custodians of the assets, and computing their fair values by reference to independent prices and yield curves, and lastly, assessing whether disclosures in the financial statements are appropriate in respect of the group's employee benefit arrangements. Other information. Management is responsible for other information, which includes the information in the company's annual report for the year ended December 31, 2020, but does not include the financial statements and our auditor's report thereon. The annual report is expected to be made available to us after the date of the auditor's report. In our opinion on the financial statements does not cover the other information, and we do not express any form of assurance conclusion thereon. In connection with our audit of the financial statements, our responsibility is to read the other information identified when it becomes available. In doing so, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there's a material misstatement there, and we are required to communicate the matter to those charged with governance. Management is responsible for the preparation of financial statements that give a true and fair in accordance with IFRS and the Jamaican Companies Act, and for such internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the company's ability to continue as a going concern, disclosing as applicable matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the company or to cease operations or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group's financial reporting process. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually or in the aggregate they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. A further description of our responsibilities for the audit of the financial statements is in the appendix, which is on pages 53 to 54 and forms part of our report. The second part of the report deals with additional matters required by the Jamaican Companies Act. We've obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been maintained so far as appears from our examination of those records, and the financial statements which are in agreement therewith give the information required by the Jamaican Companies Act in the manner required. An engagement partner for the audit resulting in this independent auditor's report is Nigel Chambers. The report signed KPMG on March 1, 2021. There is an appendix of 1.5 pages, which I'll run through with you as well. And this is in relation to the auditor's responsibilities. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also, 1, identify and assess the risk of material misstatements of the financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient, and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances but not for the purposes of expressing an opinion on the effectiveness of the group's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting, and based on audit evidence obtained, whether a material uncertainty exists relating to events or conditions that may cast significant doubt on the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we're required to draw attention in our auditor's report to the related disclosures in the financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report, which was March 1. However, future events or conditions may cause the company to cease to continue as a going concern. Fifth, evaluate the overall presentation, structure, and content of the financial statements, including disclosures and whether the financial statements represent the underlying transactions and events in a manner that achieves fair presentation. And lastly, obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. we are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for audit opinion. We communicate with those charged with governance regarding, among other matters, the plan, scope, and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during our audit. We also provide those charged with governance with a statement that we have complied with relevant ethical requirements regarding independence and communicate with them all relationships and other matters that may reasonably be thought to bear on our independence and whether, where applicable, related safeguards. From the matters communicated with those charged with governance, we determined those matters that were of most significance in the audit of the financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure on the matters, or when in extremely rare circumstances we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Thank you. Thank you, Chair. Back to you.
Thank you, Mr. Chambers. And this company will continue to support the lobby to remove and change a law that forces you to read that long document. Regarding the notice of meeting, the notice convening the meeting is to be found in the annual report. It has been circulated to members, and I now propose that we take this notice as having been read. I wish to inform you that the proxies to be exercised at the meeting must have been lodged with the company at least 48 hours before the meeting. We have received 34 proxies, representing 43% of the issued stock of the company. I also like to take the opportunity to remind you that the articles of incorporation, a copy of the minutes of the last AGM, are available for viewing on our website. At this time, I'd like to reintroduce the directors of the Board of Jamaica Producers, with whom most of you will be familiar. Firstly, Mr. Jeffrey Hall, who also serves as the Chief Executive Officer of your company. Mr. Alan Buckland, who is also our Group Finance Director. Mrs. Patricia Francis, Mrs. Sanya Goff, Dr. Marshall Hall, Mrs. Delia Kelly, Mrs. Kathleen Moss, Mr. Donovan Perkins, Mr. Grantley Stevenson, and Professor Alvin Wint. Shareholders, I would also like to introduce you to the following officers of the company and our group. From JP Corporate, Mrs. Maya Johnston, Chief Commercial Officer, Ms. Antoinette Livingston, Head of Shared Services, Mr. David Martin, Director of Business Development, Mr. Andrew White, Group Treasurer, Mrs. Tanika White Groves, Corporate Financial Controller, Mrs. Lisa McGregor Johnston, Corporate Affairs Manager. From A.L. Hugesteger, Mr. Edo Abels, Managing Director, Mr. Marcus Zolant, Deputy Managing Director and Financial Controller. From Tortuga International, Mr. Marcus Simmons, General Manager, Tortuga. Ms. Camille Lawson, Finance Business Partner, Tortuga. From JP Snacks Caribbean, Mr. Benjamin Valdez, General Manager. Mrs. Nuris Castillo, Finance Business Partner. From JP Farms, Mr. Mario Figueroa, General Manager. Ms. Peter Gay York, Finance Business Partner. From Kingston Wharves Limited, Mr. Mark Williams, Chief Executive Officer, Ms. Clover Moody, Group Chief Financial Officer. At this time, I'd like to express the company's gratitude and best wishes to Mr. Robert Smith, known as Rob Smith, who recently retired from the role of General Manager of JP Shipping after serving the company for over 30 years. So I'd like to especially say Rob, appreciating how much I've appreciated his services. From JP Shipping Services Limited, I'd like to welcome the new General Manager of JP Shipping, Mr. Gary Phillips. And Mr. John Davies continues to serve JP Shipping as the Financial Controller. The newest business in our group, Geese Line, we'd like to welcome Mr. Peter Dixon, Managing Director, and Mr. Chris Roberts, Finance Director. Shareholders, your company has long been organized to generate revenues from both a diverse range of business lines and, importantly, a diverse range of markets. We have always viewed the diversity of our business as a strength. This diversity not only provides resilience to our operating income, but it also positions us to consider business development and acquisition opportunities in a wide range of markets around the world. At Jamaica Producers, we are fortunate to have the expertise, capital, and liquid assets to effectively consider this broad range of growth and investment possibilities, while at the same time to be highly selective and able to focus our attention and resources on the prospects that can generate attractive long-term shareholder returns. I am pleased to inform you that today the workforce of Jamaica Producers and its growing list of associated companies numbers over 1,500 persons. I would like to thank each of them for their valuable contribution to the 2020 result. I also thank our customers for their continued loyalty and support, and our board and management for their counsel and leadership during what has been a very difficult year, the year of the COVID. Next item on the agenda, ladies and gentlemen, let us now proceed with the business of this meeting. I now invite Mr. Jeffrey Hall to make a presentation on the performance of the year 2020 and the outlook for 2021.
Thank you, Chairman. I just want to say at the outset my appreciation to the board of directors of Jamaica Producers Group for their leadership throughout the year. I think they pivoted very well to a different set of formats, but the engagement was just as high as it's ever been and just as useful and constructive to the guidance and direction of the business. I also want to note that every single business in Jamaica Producers Group, wherever in the world we do business, throughout this pandemic has been designated as an essential service. And that has meant that our team has been at the front lines throughout this pandemic, delivering for customers and ultimately for shareholders. And I thank the leadership of the organization as well as all the team for pushing through and continue to perform. We have three big items that I thought I would share with the shareholders today. One is a description of JP as we now see it, taking into account some of the recent changes. Two, a quick update on the results, our performance. And then thirdly, share a bit about the outlook for the future for this group. So shareholders will note from the presentation of the financial statements that we see ourselves being organized into two business lines, if you will. And those business lines each have a strategic objective. The two business lines are food and drink on the one hand, and logistics and infrastructure on the other. And those business lines have been with us since inception, and we remain committed to them. On the food and drink side, we're organized into three businesses. Our St. Mary's business, which includes our farming operations here in Jamaica, our snack food operations in the Dominican Republic, as well as an emerging frozen food business. So we see ourselves in that business as being Caribbean food specialists. Our Hoogesteger business, headquartered in the Netherlands, is a manufacturing business engaged in the production of fresh fruit juice for supply in the Netherlands, where we're the market leader, but we also export throughout Northern Europe into Scandinavia, Germany, Belgium, Czech Republic, and many other countries. Our Tortuga business started out as a travel retail business focusing on rum cake and is now an emerging spirits-based baked goods business. So that's our food and drink enterprise. On the logistics and infrastructure side, again, three big activities. Kingston Wharves Limited, based in Kingston, Jamaica, a multi-purpose terminal serving the wider Caribbean region, handling a wide range of cargo types. JP Shipping Services, which is a freight forwarding business handling less than container load cargo, as well as any other kind of cargo, primarily focused on moving cargo between the Caribbean and Europe. And our most recent entrant, the Geese Line, where we have a 50% interest. And that business is a shipping line serving exactly the same broad region, the Caribbean and Europe. And I'll say a bit more about each of these businesses going forward. I mentioned our team. Our team is spread out across the world, with the single largest block of team members being located in Jamaica, both in our farming operations as well as at the terminal. The Dominican Republic also has a big block of team members, about a quarter of the business, so about half in Jamaica, about a quarter in the DR, and then the remainder across Europe, specifically with the largest team member base being the Netherlands, followed by the UK, which actually has recently doubled with the acquisition of our 50% stake in Geest in April of this year. The remaining group, based in the United States, handling our sales and distribution operations there, as well as team members in other countries in the Caribbean doing just that. Let's look at it in some numbers. By assets, the largest block of business in Jamaica Producers Group is in our logistics and infrastructure space. About 80% of our assets are invested in that line of business. By revenues, the largest share of our business is in the food and drink category, with about 60% of our revenues being in food and drink. Our geography is by and large mapped onto our team members to some extent, round about 45% in Jamaica, round about 45% in Europe, and the remaining 10% North America and the rest of the Caribbean. Results, and I'll focus on the 2020 results and the comparatives. At the level of the financial performance, I want to draw your attention to the revenues. Entirely as a result of the pandemic, the revenues were down 2%. Frankly, we're disappointed with that result, but very much understand that it was very much a function of a worldwide pandemic. And what you see was a fairly mixed result within businesses. So some businesses saw an increased revenue line, particularly those that were supplying, those parts of the businesses that were supplying supermarkets, the parts of the business that were concentrated on e-commerce. Other parts of the business, particularly those that were focusing on the convenience sector, parts of our business that were handling durable goods purchases, specifically the movement of vehicles into the domestic market in Kingston Wharves, were adversely affected. On balance, the results for revenues were relatively flat. Gross margins did take a hit in 2020, primarily as a result of what we view as short-term disruptions to the supply of commodities into our food businesses. They were affected by supply chain issues that continue to some extent, but we do believe will resolve themselves. And we'll talk a little bit about how that now looks in the Q1 of 2021. In addition to that, we took a decision as a group to focus on maintaining our service levels, maintaining our customers' expectations throughout the pandemic. And there were times in which we had to incur costs to ensure that our factories remained open, that our labor was able to attend to the work, sometimes at overtime, etc. So there was an impact at the gross margin line. At the net margin position, we actually came out ahead of last year. Profits are up over 80%, in part because we took a decision to realize a gain on an asset, our investment in Sage, real estate infrastructure holding company here in Jamaica. We made an investment of $625 million and harvested a gain of about $1.5 billion this year. That investment was made in 2016. Very happy with that result for the group. The return on shareholders' equity in 2020 reflects that result and was at 13.4%. So looking at it at the segment level, again at the headline group level, revenues down 2%, profits up 80%, in part because we realized a gain on sale of an asset, offset to some extent by compressed gross margins in a few of our businesses while we work through the issues related to the pandemic. Looking at the segments, I mentioned before the impact on the gross margin. The impact of that was most directly felt in our food and drink businesses. So the revenues there were up to some extent, in part because some channels improved as a result of COVID, but in order to meet our supply requirements, we did take some compression on margins. The logistics and infrastructure business was more steady, with revenues declining in that business and profits declining by 10%. And within our businesses, we report profits at the EBIT level, earnings before interest and taxes. Let's look at our balance sheet now. Total assets up to $41 billion at the end of the year of 2020. Importantly, in line with our decision to harvest some of our investments in order to position the company to take advantage of opportunities that will arise in a changing environment due to COVID, our cash position now stands, our consolidated cash position that's within our subsidiaries and at the group level now stands at $9.9 billion, a very strong position. It's going to allow the group, we believe, to seize opportunities that arise as a result of the current trading environment. Our net worth attributable to shareholders is now at $16 billion, up 17% year on year. Before we pivot to the outlook, I just wanted to share how that looks over the most recent 10-year horizon. Over the course of the last 10 years, our consolidated revenues have more than tripled, and our shareholders' equity has more than tripled. So those are strong 10-year results. But what I think shareholders need to appreciate is that going into the 10-year window that I'm now showing you was a series of decisions to build a bold new platform for the group. And that platform commenced, in a sense, in a period of crisis in 2008 when we acquired the Hoogesteger fresh juice business. And we proceeded from 2008 through to 2016 with a series of acquisitions that have formed the foundation for the group today, with the acquisition of Tortuga, with the repurchase of our shipping business in various parts of our shipping business, with investment in Kingston Wharves. We made an investment in coffee and created the foundation for the group. And so in a sense, we ended up that era having the capacity to do that. We believe that we're entering this particular era with the capacity to do it again. And so we've set ourselves a charge to, again, over the next 10-year period, to try to triple the shareholders' equity of this business, in part by doing another round of platform acquisitions for this group. And so that's a major part of the thrust for our organization. And importantly, we've put ourselves in a position to have the capital to do that. From an investor perspective, we've increased our dividends by 1/3 over the course of last year. We've doubled our dividends since 2017, and we've tripled our dividends since 2015. And our market capitalization has quadrupled between 2015 and 2020. In part, reflective of COVID and investor confidence, there has been an impact on market capitalization over the course of the last year. Let's look at Q1 2021. Importantly, Q1 2021 reflects a post-COVID period, i.e., it reflects results that are COVID impacted, whereas Q1 2020 reflects a period in which you could deem to be pre-COVID, at least most of the first quarter. So what we challenged ourselves to do from a budgeting perspective was to deliver results that put the group back to where it should be. And we're pleased to see that those results have been obtained, in part by driving cost, in part by driving revenue. So the revenues are up 5.6% Q1 2021 relative to Q1 2020, but in part because we've been able to grapple with the cost issues, our shareholders' profit is up 15.5%, and those are ordinary income like-for-like terms. So we're seeing the results of the work put in to position the company to deal with what I call the post-COVID environment, and I'm going to speak to you a bit about that in a few minutes. So across our group, we organized a framework for thinking about COVID, and that framework had 4 parts, and I'm going to give more emphasis to the last part because we see ourselves across the group preparing for a post-COVID environment. So the first area of focus for us was what we called across our group the avoid area. And that meant ensuring that we had safe workplace practices, sanitization, social distancing, this sort of thing. The second area of emphasis for us was what we call the adapt phase. And that basically said, in a period of significant lockdowns, how do we make sure that we continue to simply serve customers, to continue to maintain the existence of the business? We did that well, as demonstrated by our ability to maintain revenues during the period of COVID. The third phase said to ourselves, okay, we're in COVID, and we're able to keep our customers going. How do we structure our cost base to ensure that we remain profitable throughout COVID? And that's been done. The phase that we're now in is what we call the reinvent phase. And that phase calls up on us to boldly capitalize on the new opportunities that arise as a result of COVID. And so we've identified 6 big themes that we're focusing on across our group. First is digital transformation, e-commerce. And that's within our logistics business. So for example, at Kingston Wharves, there's a heavy emphasis on a project called Click and Collect. And the idea is to digitize the experience of receiving cargo through the terminal. That's just one of many initiatives that Kingston Wharves is doing by way of e-commerce. But other parts of our logistics business are also facilitating e-commerce, including in our freight forwarding space. E-commerce will also be very important to our food businesses. Specifically, Tortuga has actually doubled its e-commerce revenues during the year, in part as a result of COVID. So rather than addressing Tortuga narrowly to the travel retail space, we found that when the person coming to the Caribbean experiences the brand and they want to get it when they go back home, e-commerce is a tool that they use. So e-commerce is a big part of our way forward. Another big area of focus for us is the diversity in cargo types. This is a risk management measure, but it's also an opportunity for us. In a world in which supply chains have been disrupted by COVID, there's a tremendous amount of emphasis on nearshoring, on figuring out other ways of ensuring resilience in the supply chain. So we want to be a part of looking at new cargo opportunities and emphasizing them. Our most recent initiative to invest in the movement of refrigerated cargo, fresh produce from the Caribbean to Europe, is a part of our desire to be deeply engaged and to have specific, tangible investments that handle unique and specific cargo types within the trade. And again, I'll say more about it. A goal for us in our logistics space is to be unambiguously the Caribbean specialist. So we want a network of logistics businesses, and we're going to continue to make investments that accomplish this in every part of the logistics space that touches cargo when it enters or exits the Caribbean, however it enters or exits. It's a major area of focus for us. And we believe we can do this, and you'll see how that's evolving. And obviously our Geest investment is a part of that. Our Kingston Wharves investment is a part of that. The Caribbean is a very trade-dependent environment, and so we know that if we invest in this space, we believe we can deliver returns for shareholders. On the food and drink space, a major area of focus for us is moving from a Benelux-focused juice company to a pan-European juice company. This has been an area of focus for many years for us. And it's it's ensuring that our products are accessible across Europe. At the outset, a major area of emphasis for us was ensuring the shelf life of our products so we could transport them over long distances. We're still doing that. We've achieved considerable success in that regard. But now we're adding to that a desire to actually put operations on the ground in 2 more European jurisdictions over the next 5 years. And we're looking at the larger of the European markets to see whether we can accomplish this. Another big area of focus across our group, but I think most obvious is in the Tortuga space, where we're emphasizing not just addressing the Caribbean market, but going to the North American market. And then finally, we want to continue to establish ourselves in a wide range of food segments as a tropical food specialist. Let me just give you a quick flavor for that. In terms of our cargo types, I think Kingston Wharves is demonstrably leading in that space, with its wide range of cargo types handled at its terminal, from grain to the automotive cargo to lumber, steel, cement, and obviously consumer goods and containers, and its willingness to invest to allow new cargo types to be accommodated. Our e-commerce commitments are exemplified by our investment in a new logistics center in the UK, which continues to drive expansion in that business. That business actually showed growth in profits and revenues year on year throughout COVID. Geest, as I mentioned, drives both our commitment to deepen our network in logistics across the Caribbean, as well as our addition of resilience in a new and important cargo type for us. Our chairman would say that refrigerated cargo certainly would not be new, but it's a new investment in this phase of our history in refrigerated cargo. Importantly, and I'll say a little bit about Geest. Geest operates 5 ships. We're a 50-50 partner with Seatrade, a ship-owning company. And those 5 ships serve, they ply between Europe, Rotterdam, and Portsmouth in the UK, head down to the Eastern Caribbean with consumer goods, vehicles, equipment, etc. Go from there to Colombia, where they load refrigerated cargo. From there to the Dominican Republic, again, a leader in moving refrigerated cargo from that jurisdiction, and then back up to Europe. And I'd like to share with you a video that captures some of the good work that Geest is now doing. Thank you. Geest is a 70-year-old business, very established name. They have a strong market position in the markets that they serve, specifically the Eastern Caribbean, as well as the movement of fruit from Colombia and the Dominican Republic. They needed an owner that was comfortable, understanding and operating in the business of moving bananas, and also comfortable in the business of moving general cargo, equipment, vehicles, etc., back to the Caribbean. And so for us, it's an honor to be able to join Seatrade, who we've known for many years, and continue to develop this business. I mentioned a number of themes that we think are important to the future of our food businesses, and I'll just re-emphasize them. In the case of our juice business, it's about ensuring that we expand beyond any particular market into a pan-European juice business. We've made considerable ground already on this goal. We're already present in a number of jurisdictions in Northern Europe, in Scandinavia, Benelux, etc. And in part, we've done this through very significant forward-looking investments in technology. And our next chess move is to establish other operations that allow us to continue to grow this business. Our products are unique. They require very specialized knowledge because we move fresh fruit from all over the world. Berries from Poland, kiwi from New Zealand, citrus from South Africa and Egypt, extracted in the Netherlands, blended, and supplied to the major supermarkets in Europe. The Tortuga business, very interesting developments over the course of the last year. I think shareholders would recall that the business emphasized travel retail in the Caribbean. And at the outset of the pandemic, travel into the Caribbean was curtailed, and the business had to look at itself and immediately pivot. And I think I'd like to recognize outstanding leadership there. The first chess move for that business was to ramp up our e-commerce platform and to drive growth through digital marketing there. And then they've immediately pivoted to add a series of additional products that address a wider range of North American consumer interests. So rather than just emphasizing rum cake, the team has added a wider range of spirit cakes. So we're now doing bourbon cake, whiskey cake, apple pie moonshine cake. And rather than just emphasizing the point of purchase in the Caribbean, where we're already listed on every cruise ship, every airport, every cruise port, we're now emphasizing the experience of North American travelers having tourism within their own jurisdiction. So the North American travelers going to the Smoky Mountains, and they enter the Smoky Mountains in Tennessee. So that's where we're going to confront them with a Tennessee whiskey cake. And that is already showing very significant positive prospects. The other area of focus for us is on developing our position as the leader in Caribbean food. So we're a specialty food company, and have always been, but we're emphasizing the Caribbean specialty. And the team in that business has said to itself, in order to achieve those goals, they want to refresh the brand and make it applicable to a wider range of products and to make it address current consumer expectations. And so again, I want to share another video with you emphasizing that work and refreshing the St. Mary's brand.
St. Mary's has developed a strong tropical snack and produce brand with global ambition. There is need to broaden the conversation around the brand, widening the perspective to speak to more than just bananas and banana chips, to move the conversation beyond product, and to connect meaningfully around a human position. The world has changed. The pandemic has made everyone rethink priorities. People want to do more things that truly matter, and they value the people that they do those things with a little more than they did before.
Our logo is inspired by elements of nature, elements that are critical to the production of St. Mary's fresh produce and snacks. Drawing from the sunburst of the JP logo, the sun represents a critical component of our brand, the element that our raw materials draw their energy from. The soil and seed element represent our beginnings, wholesome food from the earth. The banana leaf represents St. Mary's journey and growth and has been transformed into the custom font that builds our new logo. These elements have been combined. The sun icon rising above, the seed icon positioned close to the soil and under the sun, and the custom font inspired by the banana leaf. Along with the development of a new logo, we're working on other communication elements for St. Mary's. For the past 2 years, the world has been bombarded by bad, so there's never been a better time to identify and amplify the good. To boldly say that the places where good things happen are actually closer than you think. It's in your child's smile or laying down in fresh grass. It's in the hello from a neighbor, the kindness of a stranger, and in the moments you share with the products we make.
The case for good versus great. Good is something we can all aspire to. It has an emotional relevance that feels inclusive rather than exclusive. Good is wholesome. Good is friendly, warm, and reachable. Seeing the good in people means you see with the human touch. We are the place where good things happen. Values, emotions, hard work, and real people.
We also need to clearly stand for who we are. We are the ambassadors of optimism. We're not just growing fruit or packaging snacks. We put optimism in everything we do. It's in the colors we use, the words we say, and the way we act. We believe that in a world that has grown somewhat pessimistic, the optimist can be king.
We are human, happy, hopeful. The world has been through a lot, and to tell the truth, it's still going through some of it. But, and this may sound odd, we've noticed something. We've seen fathers spending time with children on their homework. We've noticed families learning how to cook a meal in the kitchen together. We've seen neighbors looking out for each other, people getting up early and taking a run. We've seen people growing kitchen gardens, discovering a creative talent, having a greater appreciation of their jobs, or just choosing to laugh a little more. We may have been through a lot, but we've come out even better. And if you take a look, you'll see, like we have, something good is happening.
So shareholders, I'm sharing with you what we're saying internally, which is that Jamaica Producers Group is now in the reinvent phase, the post-pandemic reinvent phase. We believe we have the resources to again recreate a platform for significant growth. And we believe that our strategic plan is solid and touches the areas of opportunity in which we have the competence to deliver. Thank you.
Jeffrey, thank you very much for that very positive and interesting presentation. And I'm sure the shareholders will be very interested to see this. Ladies and gentlemen, we had invited our shareholders to submit their questions to us ahead of the meeting. And throughout the meeting of the auditor report and up to 10:30 a.m. today. So at this time, I'll now ask the company secretary to read the questions which were submitted. Simone?
Thank you, Chairman. We received questions from 3 shareholders today, and I'll start with questions and a statement from Mr. Orrit Staple. He started with some observations, which I'll read for the meeting. We all give our Creator God thanks for taking us safely to this AGM today and for his many blessings to us all. Our God has been good to us despite our many challenges at work, in our home, and in our country. He remains our good shepherd who goes after the lost sheep, and when he finds it, brings it home and makes it merry. Father God, guide our thoughts in our deliberations today and help us to respect each other's inputs. Bless our board of directors, our chairman, our employees, and all shareholders, and at the end of this meeting, take us all safely to our destinations. This we ask in Jesus' name, amen. And there are 3 observations from Mr. Staple which follow. The management discussion and analysis were very professional and enabled us as shareholders to see what was actually happening in our group. Congratulations to all team members, and especially to our team leader, Mr. Jeffrey Hall. God bless you all. The board's performance evaluation indicated a few areas for improvement, and I hope these will be addressed, and these were on page 39 of the annual report for those who are following. Congratulations to you, Mr. Chairman, members of the various committees, employers for the very hard work you all displayed in achieving the very good financial results. God bless you all. The first question, Mr. Chairman, is on page 12 of the annual report. With the downturn in the movement of shipping, how will we benefit from this acquisition of SSL REIT, renting of warehouse facilities? Please explain.
I'll ask the CEO to comment on this, Mr. Jeffrey Hall.
Thanks, Chairman. This is one of the ironies, which is that obviously COVID has affected some aspects of the volume of overall trade. But one of the bright spots within COVID globally that is expected to continue long after COVID is the developments in e-commerce. And what that's seeing in the US and other developed markets, and I fully expect Jamaica to follow that, is a shift from kind of main street retail to e-commerce and direct delivery. And what's that seeing is a literal boom in the value of warehousing space. In the context of Jamaica, near port warehousing space is going to be a critical part of that trade. JP through Kingston Wharves is the largest operator of near port warehouse space in Jamaica, and we operate through that subsidiary, which has been renamed Kingston Warehousing. We have 110,000 square feet, and frankly, we're very bullish on the medium-term prospects for it, as well as our other facilities. The TLF, Total Logistics Facility, which is 160,000 square feet. We have a cold storage facility. We have several other warehouses in this area, and they're all occupied, and we're very bullish on the potential for them.
Thank you, Jeffrey. Simone? Question.
Thank you, Mr. Chairman. The next question comes from page 79 of the annual report. Trade receivables were reduced from $2,400,999,000 in 2019 to $2,367,560,000 in 2020. But our provision for credit loss increased from $125,203,000 to $200,728,000. Explain why this has occurred. Also, why did the ECL decrease?
At this time, I'd like to refer this question to Mr. Alan Buckland, our Chief Financial Officer.
Thank you. Thank you, Chair, and thank you, Mr. Staples, for the question. I think there's a couple of things going on here. I think the first thing worth remembering is that the expected credit loss method of calculating bad debt provisions is essentially a forward-looking forecast. And as a result, in times of uncertainty like we find ourselves now, that forecast is always going to be more conservative and result in a higher bad debt provision. That said, it is worth noting COVID-19 has impacted some of our customers in some of our segments, particularly the tourist market and the some of the food service customers quite significantly. And we have seen some of the aging profile worsen in a minority sector of some of our accounts. You know, we have very robust credit control policies and are constantly on top of those customers and engaging in a positive dialogue with them. I'd like to point out that in 2020, whilst we have taken additional provisions, we have actually recovered in excess of $40 million of previous provisions we'd made in prior years, and so we're very hopeful that in 2021 we'll see a recovery of some of that additional provision we made in 2020.
Thank you, Alan. Simone?
Mr. Chairman, question 3 is on page 80 of the annual report. It's in relation to note 10, A1 of the financial statements. Explain why the group has limited the recognition of losses to the value of its equity and debt interest in Tortuga International Holdings Limited.
Again, I'll refer this to Chief Financial Officer.
Thank you, Chair. This is a technical accounting point in relating to how we account for an associate company. There's an associated company in the Tortuga group of businesses, which during the year, because of COVID-19's impact and the loss of some of its revenues, made a small loss. In line with international financial reporting standards, for an associated company, you cap the recognition of that loss at the value of your investment. I think it's really important to note this is a very, very small loss made in a small associate. It doesn't have a significant impact on the accounts at all, but is just following accounting policies.
Thank you. Question 4.
Question 4 is on page 86 of the annual report. Explain why the fair value of plan assets was reduced from $4,200,906,000 in 2019 to $3,730,537.
Again, I think this one is, again, Alan, to you.
Thanks, Chair. This particular note on page 86 refers to the Kingston Wolves Defined Benefit Pension Plan, which is a pension plan that operates out of Kingston Wolves. The fair value of those plan assets, which are assessed and revalued every year by an actuary, are based on revaluing the underlying investments of that pension plan. In fact, the underlying investments are on page 87. They're set out there below. And I think what shareholders would note is that nearly 51% of those investments are in listed equity stocks, which, unfortunately, as those of us with shares in Jamaican companies would note, the Jamaican Stock Exchange in the immediate aftermath of COVID-19 becoming a worldwide pandemic, the Jamaican Stock Exchange took quite a dive, and as a result, unfortunately, the fair value of the plan assets reduced. Those assets are still valued at $3.7 billion, and it's worth noting that the pension scheme, as a result, still has a very healthy surplus of in excess of $1.5 billion. So it's still adequately funded, more than adequately funded.
Thank you, Alan. Question 5, page 96, I think.
That's right, Chair. Page 96 of the annual report. Staff cost was reduced from $1,880,391,000 in 2019 to $1,215,825,000 in 2020. But management remuneration increased from $122,597,000 in 2019 to $151,659,000 in 2020. Your explanation for this. Also, Auditors' remuneration increasing from $69,392,000 in 2019 to $80,278,000 in 2020. With the use of modern technology, why this significant increase? Please explain.
I think Mr. Staple asks this question every year, and I think the explanation is the same every year. But Jeffrey, I'm going to let you explain to Mr. Staples again this year.
Well, so as far as the auditor's remuneration, I'll ask Alan to give a view on that. This year, there's an interesting twist to it, where Mr. Staples notes that staff costs went down. In part, some of our staff costs are aligned with the volumes handled or produced in our various businesses. And the staff costs in selling and admin of some of the functions reflect those variations. And so that's the nature of the reduction in staff costs. On the other hand, we very much tie senior executive compensation, particularly the director level, to the performance of the business that's aligned with shareholder performance. And that went up significantly. And in line with that, the accruals at year end reflect an increased amount to provide for that. Alan, I know that we take a lot of time to work through with KPMG what their overall cost structure is and how it relates to changes in accounting standards, changes in expectations, and we do it everywhere, all of our businesses. But is there anything else you want to add to that?
Yes, thanks, Jeffrey. I think just one point, there's actually 2 points I'd just like to quickly note for Mr. Staples' purposes. One is that some of the numbers he picked up, I think he's missed a reclassification that we made, because the reduction in staff costs is actually from 1.35 to 1.25 billion year on year. It's not quite as significant as his numbers make out because of a reclassification in order to ensure the prior comparatives are consistent. On the subject of the auditor's remuneration, I think there's a couple of things happening here. Obviously, Mr. Staples is very welcome to come to our next negotiation with KPMG, and appreciate that greatly. In fairness to KPMG, international auditing standards have really stepped up significantly over the last few years, and I know that KPMG are being forced in order to reach their opinion, to do more work. We definitely feel that as when we're being audited. There is a slight element in the current year where, due to some of the current year charge actually relates to 2019 because of additional work that KPMG had to do in some of the subsidiaries for the new International Financial Reporting Standard 16 and 9 in 2019. So the increase is exacerbated a little bit, but we are definitely experiencing inflationary increases on our audit fees, and we'll keep on working from our side to simplify the business, to streamline it, to make it more administratively straightforward for KPMG to audit, because it's a very significant line item for our group.
Question 6.
Question 6 is in relation to page 97 of the annual report. What accounted for the company and certain subsidiaries having taxation losses of $3,607,918,000, which is available for relief on future profits? Explain. Why are shareholders not benefiting from this also?
Okay, I refer this to the CFO, but I would say that shareholders are benefiting from anything that everybody else benefits from the company benefits. But Alan, you would like to give any details about the tax losses coming forward?
Yeah. Yes, Chair. It's a really good question, and thank you for asking it, because the group has reported profits for years. We generate profits on a group basis. Within Jamaica, however, some of our subsidiaries, I think we've disclosed, would have made losses in the past. And we also are in a situation where some of our, particularly at a group level, our holding company receives non-taxable income in the form of dividends, but bears costs, which essentially means although it makes a profit for accounting purposes, actually has a taxable loss. Jamaica doesn't have a policy of group relief like other territories that we do business in. So those losses can only be shared across our group to the extent that taxable income can, following all appropriate tax laws, arm's length pricing, transfer pricing, be passed from one business to the other, which does reduce our degrees of freedom. So in summary, the shareholders are benefiting from some of those tax losses because we are utilising those tax losses where we are making profits in subsidiaries that previously made losses. Elsewhere, it's up to us to ensure that we have the right group structure to make sure that we pay the taxes that are due but do not burden the shareholders excessively.
Chairman, if I can just comment, because Alan had mentioned this issue of group relief, and it's something that I know a number of other companies in Jamaica have mentioned as an area of constructive tax reform for Jamaica. So in other countries in the world, for example, the United Kingdom, if you're a part of a group and one company in your group is loss-making and the other company is profit-making for various structural reasons or because of market conditions, etc., they take the combined group and they look at the combined group results and use that as a basis for part of the tax computation and assessment. Whereas in Jamaica, we don't view the results that way, and so you can have, within a group like ours, profits in one area that are not offset by losses in another area. We very much look at this and, in the first instance, make sure that we're adhering to the tax laws, but otherwise try to make sure that we're not paying more taxes under the law.
Thank you, Jeffrey. Simone, question 7, is it?
Question number 7, that's right, Chair. And this is the last question from Mr. Staple. It's on page 101 of the annual report. Jamaica has shown a reduction in revenues from $10,555,722,000 in 2019 to $9,192,119,000 in 2020, and non-current assets from $23,371,533,000 in 2019 to $22,613,117,000 in 2020. Explain these reductions.
Well, I think I will answer this one. And it's it, the reduction in revenue reflects the reduced sales of Kingston Wharves, Tortuga, and JP Snacks within Jamaica, and is very specifically linked to the fallout from COVID-19. The largest movement in the fall is in non-current assets, reflects the reduction in the Kingston Wharves defined benefit pension asset that was reduced during 2020, and Alan referred to this previously. So that's basically what has happened. So there's a geographical question by Mr. Staples. I want to comment that had this meeting been live, we would not have allowed Mr. Staples' questions to be grouped together like this. And perhaps next year, if COVID still continues, we will split up Mr. Staples' questions. But thank you, Mr. Staples, for all these serious questions. And we really appreciate that, the depth in which you have thought about these questions. Simone, you have other questions.
Yes, Mr. Chairman. So I'll give the next question from Mr. Edward Isaac, shareholder. And he said, Mr. Isaac says, I bought my shares in 1994 at $7.50 per share. From 2018, the company made $19.6 billion and profit has been high ever since. Why aren't shareholders getting higher dividends twice per year?
Well, before Jeffrey, I'm going to ask Jeffrey to comment on this, but there was an earlier slide, Jeffrey, where you had pointed out how much dividends have increased in the last number of years. So I think if he's watching, he would have seen the answer to that. But Jeffrey, you or Alan would like to comment on this?
So we're increasing dividends, and as I mentioned, dividends have increased by 33% relative to 2019. They have doubled since 2017 and tripled since 2015. So we're increasing dividends. In a sense, we're aligned with the shareholders' question. Could we do more? The board looks at a number of factors in making dividends. And one of those factors is the risks in the business. And looking back to when Mr. Isaacs originally invested, we had a number of risks in that era, regulatory risks, weather-related risks. And we always tried to maintain a reserve in the business. I wasn't myself CEO at the time, but the business took the view that it was important to have a reserve to handle those adverse shocks. Frankly, I think that was very good foresight. And we've actually benefited from that as an organization because some of those risks have come to pass. And we have been able to bounce back in every instance. And I remember the era in which we had Ivan, Dean, Dennis, Emily, Gustav, back-to-back successive hurricanes. This year, it's the pandemic. So, I think over the test of time, the prudence of the board on this matter, because it's a board matter, has proven itself. Right now, the company is very strong. That's not true for every company that is exposed to tourism-dependent island economies. We're going to come out of COVID with the resources to reestablish bold new platforms for this group, and that's important to us. So let me just say that, in summary, we're increasing dividends, so we're completely aligned with the shareholder on that score, and we're also maintaining prudent reserves to make sure this company can continue forever and ever.
Thank you, Jeffrey. And since we're on dividends, there's another question here from Mr. Peter Pearson. And it says, does the group have a stated dividend policy? Given the profit per stock unit, the dividend cover, and the group's cash resources, shareholders may have been expecting a more generous dividend payment, COVID-19 notwithstanding. So since we're on dividends, let's deal with that one.
We have a published dividend policy, but our dividend policy at Jamaica Producers Group allows for quite a bit of flexibility. And it delegates that flexibility to the board, which of course is then ratified by shareholders. And the board announces its meetings whenever it's going to consider dividends, but when it does consider dividends, it takes into account shareholder expectations, but also, and importantly, the growth prospects for the business being able to invest. I had mentioned that the shareholders' equity, the tangible net worth of the company, which in my opinion actually understates the marketable assets of the company. But the tangible net worth of the company on the books tripled over the last 10 years. And so what that tells us is that we have been able to invest retained earnings at very attractive returns to shareholders. And what I can say to shareholders is that if we believe looking forward that we're not able to continue to invest retained earnings at rates that are comparable to what we've done in the past, that certainly the board would be duty-bound to consider changes in the dividend levels.
Thank you.
Chairman, the last question for today is from shareholder Peter Pearson. It's regarding investment property. As indicated in the accounting policies notes and note 16, the group uses the cost method of accounting for investment property. Why wasn't the fair value method used? The fair value method allows for increases in the fair values of investment property to be taken to profit and loss account.
Alan, would you like to respond to that?
Yes, Chair. Okay, thanks for the question. The group as a whole has a policy of historical cost accounting for all of its property, plant and equipment. and has chosen to deal with this particular investment property in the same way, for the same reasons that we have the policy for historical cost accounting, essentially. This investment property that's specifically referenced is a warehouse which is held for long-term rental, and we expect it to be a part of the group for the long term, as Jeffrey had discussed earlier. We see the logistics side of the business as a long-term growth business. The advantage of the historical cost, really, we view for the shareholders, is simply the triennial cost of revaluing all of our properties, which would be quite significant because it would require all of our properties around the group to be revalued if we were to follow this. Would just be very significant, and we feel outweighs the benefit to the shareholders of the actual change to revalued the assets. It's essentially a paper profit. After all, it's not cash until you actually sell it.
If I can add to that, Chairman, this group has very significant property assets. We're the largest private landowner in the parish of St. Mary. Through our Kingston Wharf subsidiary, we're the largest single private landowner in the city of Kingston, the capital city of Jamaica. We have our juice factory in the Netherlands, a wholly owned facility right near, not too far from the Schiphol airport, which is a major global airport. We have our snack facilities in the Dominican Republic. But the thing about those assets is that there's no question that you could sell them for more than we're carrying them on the books today. But we're using those assets to generate the income that we show. And so if we simply mark them up each year just to kind of give a visual of profits, and as Alan mentioned, at considerable expense to shareholders, we're not really addressing the way that we look at the business. There are businesses in Jamaica that are in the business of realizing real estate-related returns on assets. That's what they do, and so they mark it up because that's their core. Our business is what I articulated earlier in the CEO's presentation. But rest assured that we definitely take account in thinking about how we invest, where we invest, of the value of our overall real estate holdings, which, as I mentioned, are quite considerable.
Thank you, Jeffrey. Ladies and gentlemen, I thank you for your comments, your observations and suggestions. We have endeavored to answer your questions and trust that we have done this to your satisfaction. I now wish to proceed to the consideration of the resolutions before us, and I ask our Company Secretary to remind us of the procedure for voting.
Thank you, Mr. Chairman. Today, voting will be done by proxy. Shareholders had submitted their proxies ahead of the meeting and designated either the chair, the secretary, or the group CEO as their proxy for the meeting. Since we're designated as proxies, the CEO and I will propose resolutions and indicate the votes on proxy forms by a show of hands.
Thank you. Resolutions. The accounts and the reports of the directors and auditors have been circulated previously to all members, and Mr. Nigel Chambers of KPMG has read the auditor's report, which may be found on pages 48 to 54 of the annual report. I now ask that the director's report, which may be found on page 24 of the annual report, be taken as read. And I thank you for so agreeing. Ordinary resolution number 1. To receive and consider the director's report, auditor's report, reports, and audited financial statements of the company and the group for the year ended December 31st, 2020. I now ask our secretary to read the first resolution before the meeting.
That the director's report, auditor's reports, and audited financial statements of the company and group for the year ended December 31st, 2020 be and are hereby adopted.
May I now have a proposer? Simone, I think you are proposing. And Jeffrey, are you seconding?
I am seconding.
All those in favor of the motion, please raise your right hand. All those against the motion, please raise your right hand. I declare the motion carried unanimously by a majority. Ordinary Resolution number 2, to fix the remuneration of the auditors for 2020 or to determine the manner in which such remuneration is to be fixed. I now ask our secretary to read the second resolution before the meeting.
That the remuneration of the auditors KPMG, having been fixed by the directors for 2020, be and is hereby approved.
May I now have a proposal? Simone Pearson.
Seconded.
Seconded Jeffrey Hall. All those in favor of the motion, please raise your right hand. All those against the motion, please raise your right hand. I declare the motion carried unanimously by a majority. Ordinary Resolution number 3, to ratify interim capital distributions and declare them final. And I now ask our secretary to read the third resolution before the meeting.
That the interim capital distribution of 20 cents per stock unit of record date December 21st, 2020 be and is hereby ratified and declared final for 2020.
May I now have a proposal? Simone Pearson.
Seconded.
Seconded by Jeffrey Hall. All those in favor of the motion, please raise your right hand. All those against the motion, please raise your right hand. I declare the motion carried unanimously by a majority. Ordinary Resolution number 4, reappointment of auditors. I now ask our secretary to read the fourth resolution before the meeting.
That the auditors KPMG, having indicated their willingness to continue in office, be and are hereby reappointed for the year 2022.
May I now have a proposal? Simone Pearson. Seconded by Jeffrey Hall. All those in favor of the motion, please raise your right hand. All those against the motion, please raise your right hand. I declare the motion carried unanimously by a majority. Ordinary Resolution number 5, election and rotation of directors. The directors retiring from office by rotation pursuant to Articles 78 to 80 of the Company's Article of Incorporation are Mr. Donovan Perkins and Mr. Grantley Stevenson. Both of the retiring directors, being eligible, offer themselves for re-election. Simone, to read.
That Mr. Donovan Perkins, who retires by rotation, be and is hereby re-elected a director of the company.
Would you like to propose that?
Yes, Mr. Chairman.
Jeffrey?
Second.
All those in favor of the motion, please raise your right hand. All those against the motion, please raise your right hand. I declare the motion carried unanimously by a majority, and I welcome back Mr. Donovan Perkins to the board. Mr. Bone, could you read the next resolution there?
That Mr. Grantley Stevenson, who retires by rotation, be and is hereby re-elected a director of the company.
And you're proposing that, Simone?
I am, Mr. Chairman.
Jeffrey, are you seconding that?
I am.
All those in favor of the motion, please raise your right hand. All those against the motion, please raise your right hand. I declare the motion carried unanimously by a majority. Grantley, welcome back to the board. Ordinary Resolution number 6. I now ask our secretary to read the 6th resolution before the meeting, which concerns remunerations of the directors. Please note that the directors' fees for 2020 are indicated on page 96 of the annual report, and those fees totaled $14,198,000 Jamaican dollars. Simone?
That the amount of $14,198,000 Jamaican dollars shown in the accounts for the year ended December 31st, 2020 for non-executive directors' fees be and is hereby approved.
Simone, are you proposing that? And Jeffrey, are you seconding?
I am seconded.
All those in favor of the motion, please raise your right hand. All those against the motion, please raise your right hand. I declare the motion carried unanimously by a majority. Ladies and gentlemen, this concludes the formal business of this annual meeting. I thank you for attending and for your continued confidence and support, which is so necessary for success. This is an unusual format of meeting, I must say. We don't have any direct feedback. We don't have any feel of what the shareholders are thinking or saying, expressing. And we always had a few people out there that were have a different point of view, and it's necessary. So I'm hoping we can get back to face-to-face as quickly as possible. I'm really hoping that we can do that. May I also, on your behalf, express again thanks to our directors, to the management and the entire team, who all worked extremely hard to successfully deal with the challenges experienced during the year. And as you can see from last year's results, as well as the first quarter of 2021, the company is gradually being placed in a stronger position. I now declare this meeting closed and thank you for participating in this meeting. We wish you well and hope that you will continue to keep safe and healthy. Thank you, ladies and gentlemen.
Start the fun, yo, make we have a good time now. St. Mary's potato chips, yeah. Got the snacks up right when the crew roll out. Find your flavor, yeah. St. Mary's potato chips for ya. Warm up the vibe. St. Mary's potato chips with sea salt, yeah. Find your flavor now, me feel the sound. One for me, one for you, one for friends, and we outside, and this are the snack where we prefer. JP St. Mary's potato chips. St. Mary's potato chips, so chips for ya are with sea salt. Find your flavor.
Kingston Wharves Limited. Professionalism, efficiency, and innovation. Delivering world-class service for over 70 years. Located at the center of maritime trade routes, Kingston Wharves provides strategic access to a global service network on an exceptional scale. Serving as the regional transshipment hub for Hogue Autoliners and providing services for leading car and truck carriers such as Ucor, K-Line, NYK, Mitsui, OSK, and Globus. Our decades of experience in port operations and logistics relay services has made Kingston Wharves world-class ro-ro solutions second to none. With increased on-dock storage capacity, more efficient operations, and secure parking facilities, currently some 3,000 motor units can be stored in our strategically located 12-acre car park. Our team of highly skilled professionals are prepared and waiting for your vessels to call. As soon as the vessels are berthed, motor units are reconciled with cargo manifest documents, while lashers, technicians, drivers, and coordinators work together to safely deliver the vehicles to the parking facilities under 500 meters away from vessel operations. We possess essential resources for handling all types of motor vehicles, from passenger vehicles to construction and other commercial machinery. Kingston Wharves has offered continual improvements in the safety and reliability of our services in step with market globalization standards. We continue to expand along the value chain to offering a complete range of value-added services, including minor assembly and accessory fittings, long-stay maintenance, stockyard management, and the supply of spare parts and associated inventory. But Caribbean's leading multipurpose terminal is the best choice for managing your motor vehicle needs. We have opened the doors of opportunity to connect you with the Caribbean, Latin America, and the world. The premier multi-purpose, multi-user terminal in the Caribbean. Let us be your auto logistics partner. Kingston Wharves Limited. Professionalism, efficiency, and innovation.
We believe that given the right opportunity, everyone has a chance to be great. It's not just the quantity of the food we produce, but the quality. It's not just the land or the planting of the seed, but the pride and joy of the nation we feed. Jamaica land we love is the value and standard to which we hold true.
We are JP St. Mary's, and we are fresh from the farm to you.